Market opens largely flat, contrary to the gap-up start suggested by the GIFT Nifty. It is IT and metals that gain, while financials and realty drag. The broader market outperforms.
CNBC-TV18's news break is confirmed. AkzoNobel India surges with JSW Steel set to acquire the promoter stake in a deal worth 9,000 crore rupees at a price of around 2,762 rupees a share. JSW Paints has also announced an open offer to acquire the remaining stake at 3,417 rupees.
Hitachi Energy surges as it secures an order to supply 30 single-phase transformers to Power Grid. Analyst estimates that the order could be well worth over 1,000 crore rupees.
Petronet rallies as ICICI Securities upgrades the stock to an add from a reduced rating. Earlier, the brokerage has raised its target on the stock to around 330 rupees from around 250 rupees earlier, expecting steady improvement in performance till FY28. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Manglam, and it's a super start actually to the new series. Well, in the green, the broader markets, that's the one that I'm talking about, looking very, very good. Hey, Manglam.
Hi, Nigel. Yesterday, the broader markets were slightly skittish. We did have the advanced decline ratio right down in the middle, split right down in the middle. Today, portfolios would be feeling a lot better, even as the Nifty is consolidating around 9-month high levels itself, just under 25,600. The good part, the Nifty Bank, that has been, an important one this session so far because it opened mildly in the green, thereafter sold off, and that dip has been bought into, currently back near today's high so far in the morning and close to its all-time high as well for that frontline index. Good time to get in Manas Jaiswal for a quick technical check on the market. Manas less than 3% away, around 2.5% away from all-time highs on the Nifty. All-time highs on the Nifty Bank were there already. Where do you see the markets headed? Near all-time high coming in the very near term on the Nifty?
Good morning, Manglam. So I think yesterday's move is a breakout move because Nifty has broken the key resistance range of 25,200 to 25,300. Now, if you want to set the target of this yesterday's breakout, I think the target comes near 26,200. So I think Nifty can test its previous high of that, I think 26,200 only. So positionally, I think you can create long position even at current levels. If you can keep the stop loss below 25,300, then you can play for the target of around 26,200, 250. However, if you're talking about for 1 or 2 trading sessions, I think you should wait for some correction. On declines near 25,500, you can create long position. Stop loss should be around 25,400. And the next target comes near 25,900. But I am more bullish on Bank Nifty because in Bank Nifty, you can see a clear-cut breakout on the long-term charts. And the target of this breakout comes near 60,000. So from current levels, you can see almost 3,000 points rally in Bank Nifty. For trading purpose, I think even at current levels, you can create long position in Bank Nifty. Keep your stop loss below 56,900 and target would be around 58,000.
Okay, all right. Nifty Bank, a 300-point move is what you're expecting in the near term. Manas, what about individual stocks?
So I think for today, I think you can buy Indigo because Indigo has given a fresh breakout on the charts. We have seen some consolidation, but now since stock has given a fresh breakout, you can create long position here. The stop loss should be around 56.74 and target would be around 5900 on Indigo. And secondly, the buy call on Adani Energy because most of the Adani stocks are looking strong on the charts and Adani Energy has broken its 200-day moving average. So take a long position here. Stop loss should be around 879 and target would be around 925.
All right, take that point. So those are a bunch of stocks. Actually, Manas, we have you with us. Do you have a word on any of the PSU banks? They seem to be taking off right now. A big move is what we're seeing on Bank of India, there's Union Bank, Canara Bank. All of them have moved higher, including the likes of PNB as well. So, the entire PSU bank index comes up for you on the screen right now. The Nifty Bank actually has been led higher by all the PSU banks. Do you have any particular pick there?
I think one can look at 2 PSU banking stocks. First is Bank of Baroda, where stock has broken its 20-day moving average and given a confirmation of higher tops and higher bottoms. So in Bank of Baroda, one can create a long position for positional trade. Stop loss should be around 238 and target would be around 254. And secondly, the buy call on Union Bank. Union Bank has given a breakout, inverse head and shoulder pattern breakout on the intraday chart. So positionally, you can create long position over here also. Stop loss should be around 147. And I think the next target would be around 159.
Got it. Okay. All right. Manas, thanks a lot for that. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Paul of moneycontrol.com joins us to talk about a stock that he's tracking closely. Sachin?
Multimodal logistics provider Transport Corporation of India delivered a steady set of earnings in the final quarter of FY25. Revenues in Q4 FY25 grew almost 9% year-on-year, whereas the net profits grew to almost 13% year-on-year. On a segmental basis, the revenue streams were quite divergent. The freight business, on one hand, exhibited some weakness, primarily due to slowdown in product execution across capital goods, infrastructure, and the engineering sectors. The margins of the segment also are under pressure, primarily due to competitive pricing environment. On the other hand, the supply chain business continues to remain on a very strong footing and grew almost 15% year-on-year. The management expects this vertical to clock a steady growth rate in FY26 as well, and expects it to emerge as the largest revenue vertical over the next 12 to 18 months. The CVS business also had a steady quarter thanks to benign fuel prices as well as steady capacity utilization trends. However, it expects the FY26 to be a steady revenue year for CVS business due to dry docking of 2 ships. On the other hand, in terms of the capex, the company is planning capex in the CVS business, and it expects the delivery of 2 new ships in the middle of 2026, which should pave some recovery in terms of profitability going into FY27. Overall, company remains on a very solid footing, and it expects a revenue growth of almost 10% on a YOY basis for FY26. Trading at around 19 times FY26 estimated earnings, which we believe the company's valuations are very reasonable for accumulation from a long-term standpoint.
All right, Sachin, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we'll be joined by the CFO of Electronics Smart India to discuss how demand shaping up and how do they foresee the remainder of this year. Stay with us.
Welcome back. You're watching us here on Chartbusters. We've been tracking the markets. Midcaps doing fairly well. One of the stocks which has actually done extremely well over the last month or so is Electronics Smart. And this despite, there being some concerns over demand in the first quarter on account of uncertain weather and unseasonal rains impacting sales for ACs. What's going on in the consumer durable space? We heard from Vijay Sales yesterday. We heard from the analyst of Goldman Sachs yesterday as well. But let's hear out from the person who actually sells these electronics. Premchand Devarakonda, the CFO of Electronics Smart India, joins in. Thanks a lot, Mr. Devarakonda, for joining in. You had earlier said that, first quarter AC sales, some AC sales were impacted by unseasonal rains. Now we've come towards the end of the quarter so far. How does the business look? How has business footfalls as well as sales been in the first quarter?
Yeah, good morning and thank you very much for having me on your show. As I mentioned earlier, the first 2 months of this quarter for air conditioners is quite disappointing because of unseasonal rains and also early monsoons. But in the month of June, there has been little improvement in all categories. In fact, during the first 2 months also, the other categories did decently. And also they have shown decent single-digit growth. So as we are approaching the quarter end, this is going to be one of the really not encouraging quarters. In spite of that, we are quite confident that having seen the growth, having seen the performance of these categories during the last 3 weeks, we have seen. We are quite optimistic that if you look at the first half year of this year, I think there will be definitely decent performance in all the categories.
So you hold on to the 12% revenue growth guidance and 6 to 7% same-store sales guidance that you had given earlier, right?
Yeah, that is what we have been targeting, and we're quite confident that that would be achievable.
All right, sir, just to quiz you a little bit more on what you said. Large appliances are around 45% of your mix, I think so. And ACs would come in that. ACs as a percentage of large appliances would be how much?
As a total percentage, it will be around 15.
15%.
Of the top line.
Oh.
And if I take only the large appliances category, it will be around 30%.
30%. Got it. All right. That fits in then. So you're saying the remaining part of the business has done pretty well. Good to hear that. The NCR business is a smaller part of the business, but margins over there, are a little bit lower. How do you see the margin recovery in the NCR business? And for the company on the whole, what kind of a band should we work with?
See, NCR, we are new in NCR. So initially our our store launch expenses and advertisement expenses as a percentage of the contribution coming from NCR region is quite high. As a result, there were truncated margins from NCR. As the throughput from the stores, which we started in the last 24 months, has gone up remarkably. So this year, we are expecting that NCR would be break even at PBT level.
All right. So you will break even by when did you say?
Yeah, it will be breaking even in the current year.
In the current year is where NCR will break in. But South business, which is a mature business, has 7% margins and nearly 6,000 crores in terms of sales. NCR is flat with about 500 crores in sales. What we are given to understand is that the total addressable market in NCR is a lot bigger than that it is in South. So what is your growth plan for NCR and how do you plan the revenue mix between NCR and South to change over the next few years? Because NCR, while it's a big market, I'm sure it's also a lot more competitive, which we can see in your margins.
Yeah. See, product mix wise is more or less same, both Hyderabad as well as NCR. Whereas the store growth potential is much higher as compared to Hyderabad. So, in fact, in Hyderabad, we are averaging more than 70 crores per store. And in NCR, our target is much higher than that. So that is achievable in the near future.
So you have 28 stores in NCR right now with close to 500 crores in terms of sales. If you do about 70-75 crores, you should have been doing a lot more in NCR, right, per store?
That's what, there is high potential in NCR. So in the next 24 months, we will definitely target about 50 crores per store from NCR. And it is achievable. In fact, a couple of stores are already on the path of achieving the targeted throughput.
Okay, what about the working capital days, sir? Over the last few years, I'm looking at it from the mid-60s, it's moved to around 80. Where will this number stabilize at?
Sir, it will be around 60. So that is our target. We have to bring it down to 60. And also, if you look at the figures as on 31st March, obviously it is the start of the season. As a result, we will be having huge investment getting into these inventories. As a result, the number working capital days look higher. But if you take the average for the entire year, it is below 60. And we have to maintain the working capital days around 60 days. And that is our target.
All right. So 60 is your working capital days target. You plan to open how many outlets in the next 12 months? I remember you were looking to open, 6-7 outlets in NCR this year. And how many outlets do you plan to open on an overall basis over the next 1 to 3 years?
This year, we're targeting 30 plus stores, out of which 6 will be in NCR and the remaining will be in South Cluster. And next year also, we are having the similar target. And we might expand to the other regions like Western UP, Orissa. These are the other markets we are targeting in the near future, in the next 12 months, in fact.
All right. And what would your ideal mix of products be? Because large appliances, at one point I remember they were nearly 2/3 of your revenue, but everyone's looking to buy mobiles. Mobile doesn't do much in margins, right? So, I mean, how do you plan your revenue mix to be going forward?
See, revenue mix is not under our control. It is decided by the market demand. So, and second thing, like in case of mobiles, the churn is much higher as compared to large appliances. And over the next 2-3 years, I think the product mix, the sales mix will remain more or less.
All right, we take that point. Thank you so much, Mr. Devakonda, for joining in. You are fairly confident of achieving that 12% revenue growth this year with 6 to 7% same-store sales growth, looking to maintain margins in that 6 to 7% band. A growth opportunity in NCR is still awaited. In fact, you are investing behind that, and you're looking at geographies like Western UP, etc. as well. Meanwhile, just keep an eye out on a couple of stocks as we're looking at. I'm looking at Angel One in particular, and a lot of these capital market plays as well, because news is that Geo Financials has actually applied for a broker's license, and that's something we'll watch out for, whether there is disruption coming in the brokerage industry or not on account of that. The stocks are off their highs, Angel One and the others. Geo Financial, on the other hand, has spiked to the high point of trade, up around 3.5%. Take a short break. But as we do that, remember to tune into all new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 and Prime at 12 noon for Global Reset, 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back. Well, this market is showing signs that the dip wants to get bought into, because from trading in the red, we have moved well into the green, and the Nifty Bank as well, from being down 100 points, is now up a good 100 points as we speak. But let's move on then, and as a part of continuing government action against online listing and sale of illegal walkie-talkies, the government sources tell CNBC TV18 that the Department of Consumer Affairs has written to several ministries in view of security concerns arising out of the sale. This comes after notices sent by the CCPA to Amazon, Flipkart and other platforms. Abhimanyu joins us to fill us in with more details. Abhimanyu?
Walkie-talkies only of a certain specification and working on a certain frequency are permitted as per Indian norms, and any illegal sale of walkie-talkies which do not fit the bill has already been clamped down upon. Earlier, the CCPA, that is the Central Consumer Protection Authority, had issued 13 notices to several online platforms for listing and sale of these unauthorized walkie-talkies, and now the government is looking at a holistic way to curb such violations, since this illegal listing and sale is still taking place. The Consumer Affairs Department has written to several ministries, which include the Ministry of Home Affairs, the Department of Telecommunications and the Ministry of Electronics and Information Technology. Now these respective ministries will be looking at their respective domains as far as the violations pertaining to the illegal sale of walkie-talkies is concerned. The matter pertains to a security threat. Hence, the MHA has been roped in. Apart from that, the frequency which is not allowed for walkie-talkies to operate upon, that issue would be looked at by the DOT, and the structural part of the equipment which is being illegally sold would be looked after by the MeitY. It remains to be seen how early action would be initiated by the respective line ministries to ensure that there is a complete clampdown on any illegal listing and sale of walkie-talkies.
All right, we'll take that point. Abhimanyu, thank you so much for that. A bunch of stocks which are spiking right now. Stock of the morning definitely has to be AkzoNobel India. The deal has been done. The open offer price much higher than the previous close price. And even as the deal has been at a much lower price than the previous close price, we've seen the stock bounce back, maybe a change of parentage and change of growth direction, and the completion of the deal has a relief rally. But the other relief rally has come by on Asian Paints as well. That stock is up around 1.5%. Maybe the street believes that a new player with some money into AkzoNobel may not dent the market share of the incumbents, as they have seen competition arising from Birla's earlier as well. So a big move is what we've seen on Asian Paints from lows. Remember, the stock has already corrected 30% from 52-week high already. The other stock we're looking at before we wrap up on this edition of Chartbusters is Nykaa. Held well in yesterday's trading session. The analyst meet continued, and this morning brokerages are happy with the growth focus of the company, up around 1.5% on that stock as well at the day's high. With that, we'll wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.